Good morning, folks, and welcome to Stock Charts Today. This is Bob Desmond. It is 5:09 in the a.m. Eastern Standard Time. Let's get to the headlines that could move the markets in the coming day and days. The first one off of Zero Hedge this morning is the coup is complete, Trump is done. The headline I partially agree with. The bullet points leading up to the conclusion, which is the headline, I agree with very few of them and don't understand half of them. I have said for quite some time that I do believe that there is a palace coup going on, no doubt about it. You have, ever since the election, the Republicans, forget the election, since before the elections, the establishment Republicans and, of course, the Democrats have been trying to undermine this president, and it's only accelerated in recent days. One would have thought that after a year in office, people would have become accustomed to having this president in office, but no way. They are gathering steam. Imagine you have a prosecutor who is after you for allegations for conspiring with Russia to fix an election. That investigation began almost immediately upon walking into the Oval Office, and now we have the Special Prosecutor's Office with the assistance of the Assistant Attorney General Rosenstein seizing documents from the president's own private attorney for Stormy Daniels. What happened to Russia? So why do I believe that this headline is partially true? It's because eventually they're going to get him on something. If they're raiding your attorney's office with all the personal documentation that you've ever gathered within that attorney's office, and apparently Cohen handled the dirty work for President Trump. And when I say dirty work, his indiscretions were handled through Michael Cohen's office. If there's any truth to it, I don't even know that. Now, all of that evidence is now in the hands of the special prosecutor. They will persist. What should Donald Trump do? He should fire Jeff Sessions. He should fire Rosenstein, the Assistant Attorney General, today. I have been following Donald Trump for over 30 years now, ever since the Woolman Rink beatdown he did on Mayor Koch here in New York City. And I'll tell you, this guy is a counterpuncher and a half. I don't see Sessions and Rosenstein lasting much longer, and that will rattle the markets. If you're wondering, what does this have to do with the stock market? If Jeff Sessions or if Rosenstein are fired, forget Syria. You're going to see a break in this market to the downside. I do not think that he would fire Mueller as much as the Democrats want him to, because they will go for impeachment immediately. But this is the next shoe to drop. I'm not even worried about Syria unless, of course, something goes wrong, meaning one of our ships goes down, a conflict with the Russians, whatever. But if it's simply a missile launch at an empty airbase like we did last year, then it's a non-issue, to be honest with you. Now, what's this all leading to? Why are they going after Trump? This is another story on Zero Hedge, and it really comes down to, and I'm not going to belabor this, basically the collective need versus the individual desire. That's what globalism is all about. Getting rid of the individual on a personal basis, individual on a nationalistic basis, homogenizing everything. It's basically communism, or to a lesser extent, socialism. And for those millennials out there who embrace this, be careful of what you embrace, because you are ignoring history. All you need to do is open your eyes, go back and take a look at history, and show me a time when socialism has worked. And if you say, well, look at China, well, China had to come towards capitalism, not go more towards socialism. And eventually that'll be the doom of the Chinese, is that they will have a central government under pressure for freedoms, and they will revert back to their hardcore communist tendencies. But that's not here right now, so it's not even worth discussing. Let's get to the charts. Let's get to the pre-market activity. Then we'll segue into member stock chart request. You could see that yesterday on the S&P 500, we broke out of this wedge formation and we've pulled back. We're consolidating along the 20-period moving average. My guess here, the fact that we're still trading above the 20-period moving average, is that we're going to have a bias to the upside. We're up marginally this morning, but the bias this morning anyway is to the upside. Your Bollinger Bands are narrowing, so we're going to get a break one way or the other, but I will revert back. If we get an event out of Washington, it's all about Washington, folks. Forget Syria, absent a conflict with the Russians. It's all about Washington and what will happen at the DOJ. The firings will mean nothing. The aftermath will be everything. So we're pulling back, retesting the 20-period moving average. We should rally. We have JP Morgan earnings tomorrow. We are now entering selling season. They will do anything, meaning the financial news media, to pump this market higher. Why? Ratings. Let's take a look at the NASDAQ. The NASDAQ, we have a base forming, a cup. We broke out above resistance. We're forming a downward sloping handle, as noted here. Now, members, we went over the macro view, the higher level view of the markets last night and where I think they're going on a daily and on a weekly basis. So please, just don't simply go by a 4-hour chart. This is just telling us what the markets may do today, not over the next several days. So our Bollingers are tightening. We have a base forming. We're holding on to support. I would expect a move higher, especially with the advent of silly season, meaning earnings season. Watch the headlines. Everybody's going to beat by a penny. It's all about margins and revenue. Let's take a look at the U.S. dollar. Now, the dollar, I mentioned to members last night to expect a rally. We have that rally underway. I do not think that this dollar rally is going to last. And I go over my reasons last night on Market Wrap, so members, go check that out. Now, the weaker dollar is causing a lot of strength in precious metals, of which we are long of some precious metals and the mining stocks, and we're looking to add to that position. Now, yesterday, gold hit a high for 2018 and also hit an intraday high not seen since July of 2017. So what does that imply? It implies that traders are finally waking up and they are putting on positions that will hedge against risk. If you see a break in the US dollar to new lows on the year, you're going to see gold rip. If you see a conflict in the Middle East with the Russians, gold is going to rip. Same deal in the South China Sea. And especially and most likely if we have the firing of Sessions and or Rosenstein, and I'm predicting one or both will be fired within the next couple of weeks, probably on a Friday after the markets close. So we are building a position in the precious metal names and in commodities in preparation for what I believe to be an inevitable streak of volatility for quite some time. Would you want to own with this undermining of a president, whether you agree with him or disagree with him? I couldn't stand Barack Obama, but I certainly wouldn't have wanted to have seen the people's vote undermined and have him thrown out. And that's exactly what you're seeing with President Trump. So gold is down this morning. I think we're rallying back strong in the coming days. Watch 1370. If we close above it, look out above for gold. Silver this morning, we're pulling back, retesting the 20-period moving average. Yesterday, we broke out of this bull flag formation, and this morning, we're retesting it, we're holding on to it. So I think that this chart is still looking good. This is the pause that refreshes. It may take another week or so to get a follow-through day, but I think that the precious metal names are coming alive. So members, more to come. Let's get to member stock chart request. This is where we review the symbols that our members submit for me to review. The first symbol up, CRON, weekly chart, a bullish key reversal on the week thus far. It's Thursday, so 2 trading days left to go. A lot can happen, but we're beyond the midpoint of the week, and so far, it's looking good. So we're off the highs of the week slightly, but net, a bullish week. We have a lower band of support, which we are respecting. No new weekly low, yet no new weekly high. So if you wanted to scratch the itch, if we appear poised to close at or near the highs of the week, you could scratch the itch, put on a small position. I would wait, though, because you're probably going to get another couple of weeks or so of trading sideways within this triangle formation. And then I would buy on a close above this upper band of resistance. We don't have a breakout yet on Stokes. And in fact, the Stokes are still declining. So I would really wait until 3:55 Eastern Standard Time Friday, if you're deciding to put on a trade here, to execute that trade to ensure that sellers don't move in and take it off the highs of the week, because we know that when you have both lines on Stokes trading down below 50, many times rallies fade. So leverage the fact that you're a small investor, that you cannot move the market with a few hundred share trade, and wait until Friday's close before you execute that trade. Make sure you're closing at or near the highs of the week. Volume is good so far. We have a breakout on Ultimate Oscillator. Good stuff. Daily chart. We broke out on Tuesday. We have a doji star formation on Wednesday. We may get a pullback here and a retest of the breakout point, which would be healthy. So that would be another opportunity, if we do get a pullback, to open up a position, scratch the itch, then add on a continuation breakout move higher. Volume on Tuesday was strong. Volume on Wednesday was weak. It's exactly what you want to see. So the chart's looking good. I would wait, though. Let's see how we close out the week. CJ, which is CJ Energy Services. All right, so we have a nice base that's formed here. Let's go to a weekly chart first. Eliminate the noise. We'll come back to the daily chart. All right, so a weekly chart, you could see that we have a nice sound base here. We've been here before at the support level. We were there in October. We were there in September. So we have history at the support level, and we have now broken out. And we have broken out above resistance at, let's call it, 2740. And you can see that this resistance level was resistance back here in September, was resistance back here in October. Now, what we're looking at is another resistance level up at, let's call it 2932. We have history back here as well. It was support in November, resistance in October, support in June, and support in May and April of 2017. So this is going to be formidable resistance. So if you're going to put on a position here, keep your buy small. And in fact, if you take a look at the daily chart, you may want to wait a moment here, because we're leaning into the third standard deviation Bollinger Band. We're probably going to get a pullback. It's on that pullback that you could scratch the itch. You probably get a better price. Then add more back to the weekly chart above, on a close above, resistance here. And again, that's at 2932. You get a close above that level, you should see higher highs, especially if oil is on the rise, which it has been. And with tensions heating up in the Middle East, it's only going to continue higher. The next chart up is Kroger. We spoke about Kroger back in December, and we called this breakout. And it's had a nice rally. It has pulled back along with the other consumer staple names. Here's the problem with Kroger. It has broken trend, obviously, and we have resistance above at 24.26. So what I would do here is, rather than simply use the weekly chart, I'd rather pull back when I'm indecisive to a higher level view, monthly chart, and take my crayon out, put my trend lines up and support levels, and take note of what's going on from a very high level. Because when you use a higher level view, in this case a monthly chart, you remove a lot of noise from the charts. And that's critical. If you're going to be a tactical trader, you want that clear, high-level view. What's the chart doing? What's the stock doing, I should say? And we are in a triangle formation. We are at the lower band of what should be a support level. If you wanted to buy, go ahead, buy some shares. Put on a small position. Use a stop right down below on a closing basis below 22.85. And then build on a breakout above $27 per share. Add more on a rally up and through 31.31. You can become more aggressive. And then especially as you take out prior highs, and we have historic highs going back to 2015, you could add more. But I would be very deliberate in my approach to building a position here. Because what you saw here was, yes, there is evidence vis-a-vis the volume bars that you had institutional accumulation. Then you saw some shorts getting squeezed. And now we're getting a retracement. It's normal. A little bit severe given the current market conditions. But that's the way to play it. Build your position. Open a position at support where we're at. Add more on a breakout. Use a rules-based approach. Let's take a look at the daily chart, see if there's anything happen there. Not much. There's not much happening here. Here's your head and shoulders setup. Left shoulder, head, right shoulder. We broke the neckline, and here we are today with this gap down. I'm not sure what caused this gap. I would definitely research that. But right now, it's a buyer's market. You have the chart making lower highs and lower lows, so there's no rush to go building a position here. I would stay with that higher level view. Avoid this daily chart. Stay small with your opening position and build on strength. That's it for this morning, folks. Everybody have a profitable trading day and be well.